Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. U.S. Commerce Secretary Howard Lutnick says the recent moves by Prime Minister Mark Carney in China are political noise. Lutnick also says Carney's maneuver toward China may seep into talks over a revamped North American trade accord later this year. Lutnick says Canada has the second best deal in the world, behind only Mexico. The commerce chief says Canada's tilt toward China could become an issue in talks over revamping CUSMA. TikTok will be able to continue operating its subsidiary in Canada, at least for now, with the government's blessing after a judge shelved a previous order for it to wind down. In November of 2024, under former Prime Minister Justin Trudeau, Canada ordered ByteDance to close its subsidiary, TikTok Technology Canada. But yesterday, that order was set aside by the federal court after a motion made by Canada's government in TikTok's appeal. Vancouver-based General Fusion is set to go public after filing for a NASDAQ listing through a merger with Spring Valley Acquisition Corp. The Fusion Energy Company would trade under the ticker GFUZ in a deal valuing it at about $1 billion US. General Fusion develops magnetized target technology for carbon-free power. And taking a look at the markets right now, you can see the TSX has bounced back after that sell-off on Tuesday, and it's pushing near record highs. 33,090 around there is the record. It's not far off it right now. And look at for 1 year, the performance 30%. It is up south of the border. The U.S. markets, everybody happy with what unfolded in Davos yesterday into today. And you can see all the markets are up down south of the border. S&P 500 up by a half, Dow Jones by 3/4, and NASDAQ by nearly 0.8. Now, 0.8%. Many world leaders have heaved a sigh of relief over the news that the U.S. president said he would not use military force to take over Greenland, later announcing he had formed a framework of a deal for the Arctic region. Let's get a market reaction to this from Thomas Urano, co-chief investment officer and managing partner at Sage Advisory. Thomas, thanks very much for joining us today. What do you think of what's unfolding right now? Where do you think this is going to end up?
Well, I think the escalation and then subsequent de-escalation of this Greenland negotiation, I think it's definitely having an impact on fixed income investor behavior, right? I say that because when we look at what happened in Treasury space, typically sort of these geopolitical events coincide with this safe haven move towards Treasuries, but that didn't happen. I think what we saw was a jump in Treasury yields of about 10 basis points or so under the threat of tariffs as a negotiating tool in order to adjust or like express interest in Greenland for the U.S. That didn't help Treasuries. In fact, we saw was a rise in yields. Instead, we saw gold jump and the dollar weaken. So I think it's a sign that this pattern of negotiating tactics has a cost when it comes to geopolitical disputes.
And is this a trend that has gone on through other Trump comments and is now starting to kind of solidify more as a reaction?
Sure. I mean, we saw market reactions to Liberation Day. I think the policy of Trump's negotiating tactic, the art of the deal, let's go to an extreme position and then work backwards to somewhere in the middle, find it works. But I think it's having an impact. In fact, we saw an active Treasury divestment from a Denmark pension fund. They said they would sell all their U.S. Treasuries. It was about $100 million. Small scale, but more symbolic as a policy bias away from Treasury and away from U.S. assets. So, at the end of the day, I understand that, geopolitical disputes take time to sort out. It's a negotiation, but I think there's some unintended consequences in terms of behavior patterns by investors. It impacts credit supply. It can impact borrowing costs.
And how are you approaching this then?
Well, as domestic investors, we're cognizant of what a widespread revolt against treasuries would be, more so from a policy standpoint. From an investment standpoint, politically, that's a risk, but internally here in the U.S., we're still comfortable with treasuries. We're comfortable with the level of rates. We think that the sideways pattern in rates that we've seen for the last year probably continues through most of this year. There's question marks about how, what policies the Fed will pursue in the first 6 months of this year under the remainder of the Powell regime, and then what does a new Fed chair bring to the mix when the administration nominates this new chair come June.
Okay, and I mean, one of the things everybody's talked about is rate cuts. What kind of an impact do you see that having then for bonds?
Sure. So, I think rate cuts for the most part are priced in. I don't know that that creates a huge tailwind for the bond market. I think the market is priced appropriately for, let's say, 2 more cuts. I think one of the risks is that this new Fed chair comes in and the economy's doing well, right? The labor market's doing fine. Inflation remains mildly above target range. It may be a little more difficult for a new Fed chair to persuade the entirety of the members to agree and vote for further cuts in the second half of this year. So I think that's a mild risk that's priced in. What's the scenario or what happens to the bond market in that type of scenario? Maybe the front end of the curve has to reprice some of the rate cuts that it's priced in thus far. But in general, our view is that we have a stability of yields here. Just remember, 10-year yields for the last year have been somewhere in the 4 1/8 to 4 1/4 range. We think we kind of continue that ballpark so long as inflation kind of remains subdued and the labor market remains kind of in this low growth, low higher phase.
And Kuzma, you talk about geopolitical events. What if is there any has that been factored in? If it got torn up, as Trump has said, the negotiations are going to start later this year. What kind of a factor is that?
Yeah, I mean, I think if we revert back to changes in tariffs, tariff policy, if the U.S. Supreme Court rules against the IEEPA tariffs, they have to come back with a new form of tariffs and redo the negotiation process. I think it just adds a layer of geopolitical uncertainty that the market may have to price in or think about, what that means in terms of level of rates. We've seen a number of people talk about the term structure of interest rates, geopolitical events, and thinking about rates being slightly higher or a steeper curve. It really kind of embeds this idea of further inflation risk and fiscal risk, and I think that's one of the issues that the bond market is dealing with. And ultimately, in reality, the bond market, I think, is kind of driving back the idea of fiscal sustainability. If you think about what higher yields means and steeper curves mean, it means that an interest expense becomes a real issue again.
And I just want to get your thoughts before we go on Japan and what's unfolding there.
Yeah, so this is a great example of what I'm talking about here, is that in Japan, we have a new prime minister. She's working on a package of tax cuts and spending in order to stimulate an economy in an environment where inflation's already running at an elevated level. In response, we saw 30-year JGBs up 140 basis points in the last year, right? So that's a significant sign, again, where the idea of the bond market vigilantes are coming back. They're kind of exerting their influence and saying, hey, unlimited spending that's debt financed, driving large fiscal deficits, that's just not on the menu anymore. So I think there's a cost to this type of policy, of tax cuts, deficit spending, stimulating. And in a world, again, where we don't have zero interest rates, we don't have negative interest rates, central banks, by and large, have kind of halted the QE process. This free money environment is over, and I think fiscal policy has to take that into account.
All right, we have to wrap it up there, but Thomas, thank you as always for joining us.
Appreciate it. Thank you.
Thomas Urano is Co-Chief Investment Officer and Managing Partner at Sage Advisory. Coming up, we'll get the latest on U.S. President Donald Trump departing Davos just hours after backing off on his threats to take Greenland by force. U.S. President Donald Trump reversed course on his threats to take over Greenland after announcing the framework of a future deal with respect to Greenland and, in fact, the entire Arctic region. He also backed off on 35% tariffs against the EU that would have taken effect on February 1st. For more on this, we were joined earlier by CTV's Scott Hurst.
from starting the day demanding that the U.S. must acquire Greenland and threatening tariffs, as you mentioned, on countries that stood in his way, to then announcing a framework for a deal for Greenland and, as you mentioned, for the entire Arctic region. But no more direct talk of ownership and no more tariffs on several European countries. We know little right now about the specifics, but Trump has suggested it could mean more troops, more bases, and a greater presence on Greenland, as well as additional discussions about the Golden Dome defense system, with Greenland being a key part. It could also include greater access for the U.S. to critical minerals. But this change in tune, the dramatic reversal, coming after a sit-down with NATO chief Mark Rutte. So at the time, no more talk about ownership. Trump ruling out military intervention at his speech in Davos. But what happens if these negotiations don't go well? Could he shift back to the threat of tariffs? And could he shift back to talk of owning Greenland? This is all a very realistic possibility. Trump now has instructed Vice President J.D. Vance, Secretary of State Marco Rubio, and Special Envoy Steve Witkoff to lead the charge in the negotiations, and reportedly will report directly back to him, Andrew.
So really a day of drama yesterday. Trump, of course, making a long speech at Davos, the World Economic Forum gathering. So give us a little bit more on this claim by the president that the deal, or the framework deal, will swallow up the entire Arctic region. Is there any implications here for Canada's Arctic sovereignty?
There are 8 countries with territory in the Arctic, including Canada, of course. 7 of them are NATO members, excluding Russia. And talk of Arctic security is often framed around threats from Russia and from China. And we have heard from NATO members, including Canada, agreeing that a stronger presence is needed in the Arctic. And also, Mark Carney did meet with the chief of NATO before Trump did. And the two reaffirmed the commitment that the future of Greenland should be decided by Greenland and Denmark, but also there should be an acceleration of new investments in the region to help secure the Arctic from those threats, potentially from Russia and China, including from the Canadian perspective, specifically Arctic over-the-horizon radar, which can conduct surveillance at far greater ranges than regular radar technology as part of regional defense. Also from Canada, year-round presence across land, air, and sea, and new critical infrastructure, with the Prime Minister coming out of that meeting with the NATO chief also highlighting Canada's mission to quadruple defense spending over the next decade. So Canada is very much part of the conversation and part of the discussion with other NATO allies about increasing security in the Arctic.
And that was CTV's Scott Hurst. Now, for more on Trump's comments about Greenland and Canada, we spoke with Perrin Beatty, co-chair of the expert group on Canada-U.S. relations.
I think the speech that Mark Carney gave yesterday was one of the very best speeches I've heard given by a world leader in a long, long time. He was geostrategic in terms of talking about where we're going, both as a globe and as a country. And of course, Donald Trump was ego-strategic when he was talking.
What resonated with you from that speech?
What resonated to me was first of all, it was frank and honest about the nature of the world and about the nature of the relationship between Canada and the U.S., and that's important. It was pragmatic. It wasn't caught somewhere up in high principles, but it was principled as well in terms of what it is that we want to do in the world and what sort of a relationship we want to have with other countries. So I thought it hit all of the right notes. And most importantly, it made the point to Canadians that there's no point resorting to nostalgia, to wish that things were back the way they used to be, that Donald Trump has changed the relationship permanently. And it's important for us pragmatically to look at it and to get on with our lives.
Okay, that being said, we know Donald Trump often says one thing, does another. There has now been an announcement, or at least an online post, about some sort of agreement with Denmark on the future of Greenland and how they're going to manage that. Also, there might be a critical minerals deal tucked into that. But can you accept, an online post from Donald Trump or any even official message from Donald Trump, given his track record?
Well, and that's, of course, the difficulty. And the challenge for Mark Carney as we look at CUSMA renewal is that even if you can come to an agreement, what is Donald Trump's signature worth? He was the one who replaced NAFTA, which in his view was the very worst trade agreement ever in the history of mankind, with CUSMA, which was the best ever, and he's breaking it today with his tariffs. So the problem with anybody negotiating with him is, even if you can come to an agreement, what does it mean at the end of the day, and does it stick? As of last Saturday, he was threatening the countries in Europe and the UK with whom he had reached a very difficult trade negotiation, a very difficult agreement, and is threatening them that he was going to unilaterally place new tariffs on them. This afternoon, the tariffs are off. Who knows tomorrow?
With a wider lens on how he operates with the use of economic coercion, how should that be dealt with?
Well, first of all, it's very different from dealing with somebody who's rational and principled. In any other international dealings we've had with the United States in the past, there have been plenty of instances where we've had disagreements. But you're sitting down with somebody on the other side of the table who plays by an agreed rule book, who, when they sign an agreement, it means something, where they have a clear bottom line in terms of what it is they're trying to achieve, and where their goal is to reach an agreement that both sides are happy with. In Donald Trump's case, what's most important to him is that he be seen to have won, and most importantly, that the other side be seen to have lost. That's not a very good basis for building a relationship.
Okay, so in that case, we know Canada is already attempting to pivot away, be less reliant on the U.S. Is the country firing on all cylinders to try and do that, or is there more that can be immediately done?
There's lots more that we need to do. We haven't finished the job in terms of getting rid of interprovincial barriers, for example, domestically. We were promised that was going to happen by Canada Day. It hasn't happened. We've got to focus very clearly on getting the infrastructure in place and rapidly that will allow us to get Canadian goods, particularly Canadian resources, to market. We've got to make it clear that we're focused on building our productivity and our competitiveness in Canada. The Prime Minister did a great job yesterday in sending the message that we're open for investment and that that will be a reliable partner. All of this is positive, but there's much more to do. And we need to understand two key things here. The first is that for my lifetime, the single most important relationship that Canada has, whether in business or in security or in diplomacy, is going to be with the United States. We can like it or not like it, it's the reality, and we're going to have to be very focused on managing that. The second that we have to focus on is that it's important for us to recognize that we can't go back to the way that things were before. We have to make a decision to take our future in our own hands and to systematically, in a determined way over the course of literally decades, build our resilience, build our sovereignty and our independence as a nation, and build our prosperity. And that has to be the priority.
That was Perrin Beatty, co-chair of the expert group on Canada-U.S. relations. Coming up, the founder of Lululemon is speaking out after the company launched a new line of products that has received some backlash. BNN Bloomberg's Lindsay Viscaya brings us the story right after the break. The founder of Lululemon is calling the company a bit of a lemon right now after the company launched a new line of products that received some backlash. For more on this, we're joined by BNN Bloomberg's Lindsay Viscaya. Never a man to hold his tongue. No, well, it kind of is. He's not saying nice things about them.
He's not. He is a controversial figure. As you
Yes.
said, the founder, he is the largest shareholder still, which is why his opinion really holds weight. But he's talking about this latest line from Lululemon, and I believe we do have images of some of the products. They were temporarily paused online. It's called the Get Low line. Temporarily paused because people were complaining about the quality. They said that they were ill-fitting, that they were too sheer. Lululemon has told the Canadian press it was paused so they could better understand some initial guest feedback. They're now available online again. But if you notice in some of these pictures, you'll be able to see it. They now come with sizing tips online, which other products on Lululemon's website do not. So they're back up. And yeah, this is just the latest really for Lululemon and Chip Wilson calling them out on that.
They're telling people to go a size bigger, right?
Yeah, they're telling people to go a size bigger, I think.
How did they
Well, this is the thing. So Chip Wilson is questioning this as well, just like you are, Roger. He has a statement that was on LinkedIn. I believe we can pull part of that statement up. It's long, but within it, Chip Wilson was saying that this is a new low for Lululemon. He said he believed the company had lost its cool for some time. Now he thinks the company has completely lost its way. And he's not faulting the employees, he says. He's faulting the board and the product quality testing, which obviously is something every company does with any garment, right? You look at the fabrics, you look at how they wash, how they wear. And he's saying, the product quality testing is maybe not there for Lululemon, because there was another line in 2024 that was pulled completely because people were complaining of the quality of it. So this is the second time. And again, it's back up now. You can buy this Get Low line, but there was a lot of backlash online.
And this is in the middle of a lot of other things that are unfolding too.
Yes, yeah. So there's a bit of a shakeup. The current CEO, Calvin McDonald, we were talking about this at the end of last year. He's planning to step down at the end of this month. And Chip Wilson has been very vocal about that too, talking about how the company needs a new CEO that can kind of help Lululemon find its way. There's 2 members within the company that are currently acting as an interim CEO. And the board is finding a new CEO using what they call a comprehensive search process. But Chip Wilson also weighing in, saying that they need someone new, kind of from the outside to reshape Lululemon, because even over the course of 2025, the stock price is down like almost 50%. And that's not just because of quality, it's also just because of more competition, and also people don't wear leggings as much. They're back into jeans. So there's a number of reasons that this Canadian company has been facing some tough times.
All right. And there'll be lots more, I'm sure. There's
probably
more interesting conversations to be had about Lululemon.
Yeah.
Lindsay, thank you as always. Lindsay Biscaya, BNN Bloomberg. When we come back, we'll hear from U.S. Commerce Secretary Howard Lutnick on why Canada might be making a big mistake in shifting trade focus to China. That's next. U.S. Commerce Secretary Howard Lutnick says the recent moves by Prime Minister Mark Carney in China are political noise. Lutnick also says Canada has the second best deal in the world behind only Mexico. But looking onward, the commerce chief warns that Canada's tilt toward China could become an issue in talks over revamping CUSMA. Shares of GE Aerospace are falling. They're down about 6.6 right now after the company's outlook fell short with investors. GE Aerospace recently forecast annual profit above estimates, driven by strong demand for aftermarket parts and services. Airlines are expected to prioritize maintenance spending due to aircraft supply constraints. Demand for new aircraft continues to outpace supply as airlines seek to capitalize on robust travel demand across multiple regions. Procter & Gamble cut its earnings expectations, citing higher restructuring charges and a challenging consumer market. The downgraded outlook comes despite the company reporting higher revenue in its latest quarter, driven by price increases used to offset lower sales volumes. And a quick look at the markets, and you can see TSX has pulled back a little bit. It was closing in on its record high from Monday, but it's backed off a little bit, still up 0.64 for the day. And south of the border, everybody happy down there. Look at the NASDAQ. It's up by more than a point right now, 1%. And Dow Jones down by 0.83, and the S&P 500 up by 0.66. As we just mentioned, U.S. Commerce Secretary Howard Lutnick says Canada's move to strengthen economic ties with China are just, quote, political noise and may jeopardize talks over a revamped North American trade accord. Here's his interview with Bloomberg Television.
Well, in Canada, we're trying to do a few things. Clearly, we need to diversify, trade particularly. I think also he is trying to align with the European countries as well as some other countries in terms of trying to put up a fairly...
All right. We're having some technical difficulties right now. That was from the Ontario Teachers' Pension Plan, but we will have Secretary Lutnick coming up after the break. Our technical difficulties have been sorted out. We now have that Bloomberg interview with U.S. Commerce Secretary Howard Lutnick and his comments about Canada's move toward China.
I think our relations are perfectly fine, right? I described the relationship with respect to the whole, when Greenland was going back and forth before we sort of settled it with a framework agreement, right? I called it a kerfluffle. Right? It's basically like if you have an argument with your spouse, that's not real, it's not a real one. It's like a small thing.
My spouse doesn't go out there and deliver a speech after that argument and say it's the end of the relationship.
Fair enough. But you're right. And I think they overreacted. And it's proof that they overreacted because a day or two later, there's a framework that makes sense, right? What did we say? We said we cared about it for national security. Right? We said we care about it in national security. I mean, it's obvious we care about it for national security because if you're going to build a golden dome over the United States of America, right? Wouldn't you prefer the Golden Dome cover Greenland? So when you're knocking out the missiles, you're not knocking them out right over your head? Like we've all seen Israel like knocking out the missiles right over their head with their Iron Dome. Wouldn't you prefer to knock out the missiles if you live on the east coast of the United States of America over Greenland, a couple of thousand miles away where there's no people, right? Doesn't that sound better? So this is sort of where we're thinking about it and how our national security team is thinking about it.
So what's actually in the framework?
Well, the framework is a national security-based framework. That's what the United States cares about. We care about our national security, and we care about the shipping lanes. So let's talk about the national security and shipping lanes, and let's see if we can't figure out a framework to do that together. And I think that's what the president truthed about. He said we're going to try to figure that out together because those were the key points that the United States of America cared about. And I think the president's been clear about it, and he just wants people at the table dealing with it swiftly. I mean, think about this. He sends out a truth. And like within 4 days, right, we have a framework agreement. Like that's, by the way, that's a pretty effective
And we had
truth,
tariffs
I have to tell you.
We had tariffs on, tariffs off.
They were
what
never
does this
on.
do?
They were never on.
The threat of them are coming on for February 1st. What does this do now for the agreement you and your team struck with Brussels? Because the legal implementation has now been put on hold.
Oh, I think it'll be put on unhold probably tomorrow. I mean, come on. That's why I said it's an overreaction. I mean, they know when the president says this is what's going to happen. I mean, what provoked the president? What provoked the president was that they sent military people to Greenland. I mean, they didn't send military people to Ukraine. Like, why are they sending military people to Greenland? It seemed like a provocation.
We spoke to the Finnish leader, and he suggested that was a miscommunication, and he cleared that up pretty quickly. There's something I want to get into with you that I think is quite important. This, of course, is the art of the deal. We talk about it on the programme all the time. The president anchors the story to the extreme and then gets a favourable deal for the United States. I think that's well understood. Something happened, though, in the last 12 months that I think is really interesting. He tried the same thing with Canada and totally upended the election in Canada north of the border. Poilievre was going to sail away with that. The reason Mark Carney's here as Prime Minister is because the President took such an assertive stance on Canada. Now, at the time, I was finding the humour in the conversation. Then the Canadians started lighting up the Bloomberg terminal, sending messages. They were deeply offended. And we've seen that damage the economic relationship with Canada and the United States. And the risk here, Mr. Secretary, and I'd love your thoughts on it and your reaction, because I think this is really important regarding the Europeans. The points you're making about Europe and have made over the last week are valid points, and they're actually well received by a lot of Europeans. But the style in which it's being delivered at the moment, some of them are finding it offensive. Do you think there's a risk here that we damage the economic relationship with the Europeans in the same way we do with the Canadians, and for that matter, derail the conservative movement in Europe that's well underway?
I don't. I think the fact is that you need to rethink. I think Europe is amazing, and it's got extraordinary opportunity and a $20 trillion economy. But think about this. If they had the right digital rules, meaning similar digital rules to the United States, we have $6 trillion worth of committed investment to build data centers in America, and we have a $30 trillion economy. So if they had a $20 trillion economy, you'd say, okay, if they had the same rules, they could get $4 trillion. Or how about $2 trillion? You realize $2 trillion for their economy, right, would be 10 points of GDP spread over 3 or 4 years. I mean, that would produce amazing growth. And let me sort of explain how that works. So we did a deal with Micron, right? They're going to build $200 billion in America. So on Friday, last Friday, we did a groundbreaking of their mega fab, $100 billion fab. And where did they do it? They did it in upstate New York and Syracuse. Now, there hasn't been industrial building in upstate New York in probably 40 years. But if you think about it, it had a huge industrial base once upon a time. So what does it have? It has power because it has the power infrastructure for that. So what that does is it creates like this enormous uplift. And I think Europe can do the same thing. I think the UK can do the same thing. And Canada is just thinking in this arrogant kind of thought.
Well, but just to build on what John is talking about, it's a style question. Can you get the same results without using words like calling leaders weak or their economies decaying, right? Is it necessary to provoke the visceral feeling that we feel among a lot of leaders here and in conversations with international investors? I mean, is there any other way? Is that style more harmful than it is helpful?
Well, I think it creates listening. Like people pay attention to it and listen to it. If you just sort of blend in, no one hears anything in Davos, right? Everybody says the same blah, 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 blah. And if you need to break out and you need to say it. So my view is, right, that Canada has never expressed to the world that they have the best deal, the second best deal in the world. The best deal in the world is Mexico, because remember, they have USMCA, which means 85% of the Canadian economy comes into the United States for zero. And there he is complaining that he's going to go to China and improve it. What's he going to do? China's delighted to sell to him. But do you think China's going to open their economy to accept exports from Canada? This is the silliest thing I've ever seen. They have the second best deal because Mexico's got a little better deal. They have 25% on the extra 15%, whereas Canada's got 35% on the extra 15%. But give me a break. They have the second best deal in the world. And all I got to do is listen to this guy whine and complain.
Mr. Secretary, in fairness, you've seen from the airplanes, you've seen about a 30% decline in Canadian visitors to the United States, if not significantly more. You've seen a similar type of decline from China. European travelers inbound have come down. There is a sense that people do not want to come to the culture of the U.S., and there is this anger about it. And I just wonder if you think that that's just temporary, or you just sort of dismiss that, or you think it's irrelevant to the actual issues?
I think what that is political marketing. Right? The Canadians have the second best deal in the whole wide world. If they continue this path, right, which is a political path of a certain thing. I'm going to go fly to China. I'm going to open up my markets to China. I'm going to take Chinese electric cars and do all sorts of this stuff. Then when USMCA gets renegotiated
this year,
sort of like towards the end of the summer, right in the middle of the summer, do you think the President of the United States is going to say, you should keep having the second best deal in the world? I mean, you guys are such great friends. I mean, they are playing with a set of rules that they haven't really thought
I can
through.
hear it in your voice. You're excited about negotiating this, aren't you, later this year?
Well, they've sort of given a sort of a roadmap of saying, so I guess we should change the whole deal. Right? You want to be like the rest of the world. You don't want to be this favored neighbor because you've taken it so for granted that you're willing to come to Davos and say there's two hegemonic powers in the world and we're going to decide which one we're going to work with. Really? You're going to either work with the United States of America, where 75% of your economy is totally tied to it, or China? Why would you say that? I think it's political. You know, I think if we take it correctly, we should look at it as just political noise coming out of a prime minister, and maybe this is working for his election, right? Because I don't think it can be real, because if you took out the math of Canada's economy and it's doing business with the United States of America's $30 trillion economy, there's no such thing as changing what they have today. No one would vote for changing what they had today. Now, maybe they're marketing it well, but they're just for their politics. But they're surely not marketing it well for their fundamental economics for long-term the United States.
All right, that was U.S. Commerce Secretary Howard Lutnick speaking with our colleagues at Bloomberg TV. Ontario Teachers Pension Plan CEO Joe Taylor says the pension plan has cut exposure to the U.S. dollar and treasuries. He spoke to Bloomberg on the sidelines of the 2026 World Economic Forum in Davos, Switzerland, and began by discussing his view on Carney's performance at the summit.
Well, in Canada, we're trying to do a few things. Clearly, we need to diversify, trade particularly. I think also he is trying to align with the European countries as well as some other countries in terms of trying to put up a fairly robust approach towards NATO, Greenland as it was at that point. So You know, to me, what we're trying to do is reinforce some old characteristics of, you know, we work with people in a collaborative fashion to try and make the most out of the opportunity. Very similar to what we do at Ontario Teachers. I mean, we've got a long history, as you know, of 35 years of working with partners who actually have particular expertise and skills that they can bring to the table with us. And whilst we invest on our own, we can always learn more and learn from smart people who are in the country and know how to navigate.
Well, let's talk about how you're navigating the United States at the moment. Have you been diversifying? Have you been cutting your dollar exposure, hedging it? What have you been doing?
Now, you asked me this question a year ago, so I want to make sure I'm actually on point. So we did make some adjustments to the US. We thought we were a little overexposed to the dollar, and actually probably a little overexposed to US Treasuries. So we cut them both. But, you know, the right corrective message is the US is still 30%, 35% of our portfolio. It's probably about 30 at the moment. And it's always going to be an important territory for us for further capital.
When did you cut the exposure, and what was the main driver of it?
Well, we saw personally that there was probably more risk of a deflationary dollar. So we cut it in probably Q1 last year, and we've sort of kept it at a similar level since then. You know, the really interesting thing is, you know, our business is a mix of investing in great private companies as well as investing in listed markets. So as we've started to realize some of our private portfolio, which we did very successfully last year, where do you put that capital? So actually what we've tended to put it in is more of a sort of a benign but liquid public format, and then you get the equity weighting, which is actually quite strong towards the US. So to some extent, you always tend to get a little bit pulled back to that territory.
Okay, there's a lot to unpack there. On one hand, the idea that you are getting cashed out of the private equity holdings or the private assets, and that you're putting it into public markets is really interesting. How much is that a path of travel for you, moving away from private into public?
Right. So there's a headline I should probably course correct straight out the gate, which is to say private markets has been a hugely successful part of our business, is still very much a core activity. You know, like any investment company, we should say we're not asset collectors. We try to acquire companies, build them, make them successful. If somebody comes along and says we'd really like to buy them and give us a good offer, then we'll tend to monetize them. So if you come back to what we were doing last year, probably our biggest realization was actually selling our airport portfolio of 5 airports in and around Europe. But we also sold some private equity assets, as you rightly pointed out. But our plan is to reinvest that capital. So the point, I would say more as a direction for us, putting that money into liquid form in public markets, is we're really just warehousing it till we know where we want to redeploy it, given our view of Teachers wants an all-weather portfolio, which can be a very resilient entity in difficult times. We've been seeing some of that recently, and it stood up really well to those challenges.
How much is your portfolio tethered to the AI trade?
The AI question always tends to arise somewhere in the discussion.
Well, the entire promenade for Davos has the company name .ai, something AI, come in because we're doing AI.
Exactly right. So from an investing point of view on AI, I'm not sure we're necessarily the same as all. So we're probably more in the mode of we're not sure every AI business is going to be successful. We're not sure the larger businesses are automatically the ones that will win over time. And we're trying, therefore, to be careful, selective, and the danger of that is, do you make the right choice in terms of who you go with? The other thing for AI for us, which is really important, is how it's impacting our existing portfolio of companies we already own. So how do we enable them so that they actually use AI themselves to be advantaged rather than sort of a disadvantage by AI hitting them? And also we've got our own business, which is how do we use AI to actually make better choices using the data we have.
Do you feel good about SpaceX and Anthropic?
Yes, broadly. We own both of them, as you know.
Yes.
I'd say we feel Anthropic's an interesting AI investment under the description I just gave you. I mean, let's be honest, SpaceX has been a fabulous investment for us.
They're going to IPO.
Well, it may IPO, but even if it doesn't, we've seen, you know, I think everybody gets a little bit fixated on the market capitalization that's being discussed. I would go back to SpaceX and say there's a business that's done excellent execution around engineering, launching launching, hitting their milestones. It's the dominant business in space at the moment, and they've done a super job of actually making sure they delivered everything on time and broadly with a very cost-aware analysis of what they do.
We're speaking to Adina Friedman of the NASDAQ a little bit later on. I think a conversation we might have is what happened to the stay private forever story, because now we're talking about exits. Is there something about the size of the companies we're talking about, SpaceX, Anthropic, whoever it might be, OpenAI, whereby actually the natural evolution of a company still is ultimately you get big enough, you go public?
Well, that's sort of been the way. What I would say is a couple of maybe contrary views.
Please.
Is firstly, the IPO window, as we all know, isn't open for very long, very often. So there's really a question of does it actually match your timing and you're able to do it when you need to do it. I think the other thing is actually, what's the mood of existing sort of institutional investors in IPOs to say, how would you want to value this business and what sort of discount would you want to be able to come in at the right price? I would say we've had lots of really interesting conversations with companies that being an alternative to an IPO because we can provide long-term patient capital, which actually allows them to grow further, but doesn't necessarily mean they have all the issues around disclosure, around things that come with being a listed company. And for some businesses, the amount of disclosure you're asked to make can actually be a little bit challenging in terms of what your competitors can learn about your activities.
That was Ontario Teachers Pension Plan CEO Joe Taylor speaking with Bloomberg Television at the World Economic Forum. Just ahead, Mark Carney is meeting with his cabinet today, and there will be plenty to discuss after Carney's trip to Davos. We'll get an update when we come back. The federal Liberal cabinet is meeting in Quebec City today with a focus on the economy, affordability, and security. The meeting is also presenting a first chance for cabinet to hear from the Prime Minister about his new trade agreement and change in relationship with China. For more on this, CTV's Jeremy Sherrill.
What this government is calling a planning forum. We used to call these cabinet retreats, but a cabinet planning forum is what they're calling this. But to your point, an important first opportunity for the Prime Minister to meet with his cabinet and address the last 9 days abroad, his trip to China, to Qatar, to Switzerland, where he signed that new trade deal, as you've touched on, that will allow for more EVs, Chinese-made EVs, to gain access to the Canadian market, 49,000 a year, while Canadians and the Canadian canola industry is going to see a reduction on tariffs. So the first opportunity for the Prime Minister to talk to his cabinet about that. And what we've also heard from the Prime Minister's team is this is a meeting that will focus a lot on the priorities that were set out that were set out early on by this government for the cabinet. And chief among those things that this government has set out as priorities is an economic and security relationship with the U.S. and bolstering relationships with other like-minded countries. Exactly what we've been seeing the Prime Minister do for the last several days. So we'll hear a lot of talk, I think, about the economy, about the new deals that the Prime Minister has signed, but also what we can expect moving forward in the relationship with the U.S. Of course, CUSMA renegotiations are underway now, so that will be a focus. But to your point, Andy, there will be a lot of talk as well and many questions about the Prime Minister's speech at the World Economic Forum that has gathered global attention, praise from some world leaders. Donald Trump clearly not a fan of the speech, criticized the Prime Minister over it, reminded Prime Minister Mark Carney during that speech in front of the crowd that he believes Canada lives because of the U.S. So a first opportunity today, we'll hear from the Prime Minister at 1 o'clock, and a first opportunity to perhaps get his reaction to U.S. President Donald Trump's comments about his speech that garnered so much attention at the World Economic Forum.
I was looking at global coverage. CTV touched on this yesterday. Newspapers around the world, some of them saying that Mr. Carney is leading now the response to what people call Trumpism.
Yeah, absolutely. He seems to have, through that speech in Davos at the World Economic Forum, garnered the attention of leaders around the globe for saying what many have been thinking, but not saying out loud, right? And recognizing that things have changed and that there are new realities that Canada has to deal with. That was his perspective that he offered in that speech in Davos, and especially focusing on the fact that we, Canada, as a middle power country, as he talked about it, and other middle power countries need to kind of work together and recognize that other countries like the U.S. that are far more powerful have shown recently that they have the ability to do what they want to do. So, to your point, Andy, many around the globe have kind of identified that the Prime Minister, they believe now, Canada's Prime Minister, is leading the charge in that discussion, in what is now a new reality, in dealing with a superpower in the U.S. that is just not operating the same way it has for decades, right?
And that was CTV's Jeremy Sharrow. Market calls coming up next. Today on the show, we have Javed Mirza. He is the quantitative technical strategist at Raymond James. He'll be taking your questions on technical analysis. And a quick look at the markets before we go. Let's see how Bay Street is doing. It's pushing back up toward record territory. It's up by almost 0.6%. It's being driven by the materials index, which is up by 2.84 last time I looked. And one of the big movers is new gold, which is up about 11% for today. South of the border, lots of green as well at the NASDAQ and the Dow. So good day all around for everyone. Thanks for watching Morning Markets. We'll see you back here tomorrow.